Namaskar and a very good evening everyone joined with us in this industry-specific webinar series with today's webinar on Building an Effective Internal Audit Retail Industry, which is organized by Internal Audit Standards Boards of ICI and hosted by Gwalior branch of CIRC of ICI. I should be Jain, moderator to this webinar, a practicing chartered accountant in Gwalior, having my core practice in corporate laws. Extend a very warm and hearty welcome to each one of you present with us, and thank you all for taking the time out from your busy schedules. Now, I would like to introduce C.A. Samar Doneria, sir, Chairman, Gwalior branch of CIRC of ICI. If I talk about his experiences, he is qualified chartered accountant, having vast post-qualification experiences and expertise in internal audits and statutory audits of various MNCs. He has served Gwalior branch since many years and currently serving as chairman of Gwalior branch. Now I request C.A. Samar Doneria, sir, chairman Gwalior branch of CIRC, to start this event with their opening remarks. Over to you, sir.
Thank you, Surbiji. And I would like to say, first of all, good evening to the chairman of Internal Audit Standard Board, C.A. Nanda Sahab, and vice chairman, I think Gyan Mishra ji is not presenting over here. So when they come, I will like to welcome him at that time. And sir, this is the program which I on the behalf of Gwalior branch. I was very happy when I received the call from the board to co-host this program. And if we talk about the internal audit, and especially in the retail industry due to its complexity and number of large but small transactions, it is very hard to have some very good idea about the audit environment which has to be taken up by any auditor during the course of audit. And when I came to know about the speakers, and I would like to quote the name of those: Shri Manoj Agrawal sir from Metro Brands, Shri Ratul Neogi ji from Trent Limited, and Mandeep Singh ji from Atul Limited. And all are the keynote speakers. All the keynote speakers are from the industry. So I think it is a it's going to be a very good discussion about the internal audit environment to build an effective internal audit in the industry. When we talk about the uh, audit environment in basically what the point of view of industry. So I'm highly thankful again, and I would also like to say that we are going to have a nice discussion, and all the participants will receive the good knowledge base for their upcoming projects and upcoming assignments. So thank you, Surbi, and thank you to all to give me a patience hearing. Thank you so much.
Thank you so much, Samad sir, for such hearty welcome greetings. Now, moving forward, today we are having with us one of the most renowned person in the field of internal audit, C.A. Charanjot Singh Nanda sir, present chairman of Internal Audit Standard Board and Digital Accounting and Assurance Board, and vice chairman of the Banking, Financial Services and Insurance Committee. He was a member Quality Review Board set up by the Government of India, was a member of the Central Council, the Institute of Chartered Accountants from 2004 to 2016. He was the chairman of Women Members Empowerment Committee of Institute of Chartered Accountants of India. He was the vice chairman of Committee on Public Finance and Government Accounting, was the chairman of Committee on Financial Market and Investor Protection, was the chairman of Committee on Banking, Insurance and Pensions, member of SEBI Advisory Committee on Primary Market and Mutual Funds from 2007 to 2010. I request Nanda sir to deliver welcome address and keynote of this session. Over to you, sir.
Thanks a lot, Madam Surbi, the chairman of Gwalior branch, C.S. Smith, Doneria, the reverend speaker of the day, Mr. Manoj Agarwal, who is present there, Mr. Mandeep Singh, Mr. Atul Neogi, Arun Agarwal from ISB, Surbi Tyagi and Shoavin Nigam from ISB, and Ayaz from the technical team. Ladies and gentlemen, I am truly honored to be amongst you. The board, Internal Audit Standard Board, by God's grace, I set up this board way back in 2004 under the chairmanship, under the presidentship of C.A. Sunil Goel Sahab, who hails from Jaipur. And since that day, this board is scaling newer heights day by day. I am very keen and very happy to announce that board is totally inclined to your perspectives. I again say on record, any area where you want more impetus, more technical knowledge, we are there to serve you. You can always ring me up, call me up, write a mail to me. My contact details are available on ICA.org. You can take my mobile number, my email ID, and you can always contact me and tell me the area where you want us to discuss and provide to you the technical impetus to perform. I want to say very candidly that only those people who will lead the technology front by serving their clients shall be leaders in times to come. The practices have changed manifold. We want people who could perform to the highest step to come at the largest level and perform par excellence. And that is why we thought it fit. The 3 seminars, the last one was also on risk, this is also on risk. And on 15th, we have the 3rd webinar on risk, internal audit of risk. So ladies and gentlemen, if I start giving my keynote address, the first point on which I would like to focus is the key areas to apply audit analytics to drive value for stakeholders, and not only stakeholders or clients, but for the government and for the regulators. The first thing which we need to understand is that audit analytics can provide simulation and planning tools that help retailers get more from their marketing spendings, helping plan, anticipate, and course correct media in a very dynamic market. This dynamic market needs our impetus, our thought process, our indulgence. And that is only possible when we all auditors, we all stakeholders to this assignment, to this perspective, work towards creating value and worth. The second thing, with the increased complexity in retail today, applying advanced audit analytics and pricing can be critical for retailers to stay ahead in this market. You're all aware that internal audit essentially is a management function whereby the auditor reports either to the board or to the audit committee, as the case may be. And let me tell you, yesterday, I'm also the chairman of Digital Accounting and Assurance Board, and yesterday we did a very important webinar for SAFA. I am the chairman IT committee of SAFA, the 9 countries, and there we did a program on data analytics. Data is today's gold. Earlier there was gold, there was petrol, today it is data. People who have data and who know how to use that data to create value is a greater perspective. The third important thing you need to know is that the use of audit analytics in the supply chain is also expanding to include collaborative systems that integrate marketing and, more importantly, merchandising, so that you are able to effectively bring forth, more closely connect retail to their suppliers and distribution partners. Very, very important. Suppliers, distribution partners, things moving around, working to be done in that same force is again very important. And therefore, data analytics will again play a very pivotal role in ensuring that things move in a very smooth fashion. The fourth, retail audit analytics can be applied to detect and prevent fraud and to manage risks within the organization. Identifying the risk, mitigating it, and mitigating it when it comes from nowhere is a very important task which we all need to accomplish. And the last thing in this point I would like to say is that workforce audit analytics solutions that can be used to assist with proper resource allocation when building a high profit yielding workshop. Manpower moderation, where you need people, send them there. If you don't have people, please stay away from sending people who are not resourceful, people who are unproductive to a particular assignment. Now, what are the key control from internal audit perspective? The first, risk management policy and procedures are in place. Very, very important. The risk management and the risk procedures are in place. Risk is essentially the management's perspective, but we as auditors need to understand how it is there. Whistleblower policy and code of conduct exists and implemented. Yes. For even smallest of the concerns, we need to understand that we can't have ignored the whistleblower policy or the code of conduct. Adequate segregation of duties exist. Every man should know the duty which he has to understand. Enabling of segregation is very, very important. Legal compliance framework is documented and compliance health is checked on periodic basis. Documentation plus process of checking the compliance is very, very important. Next, key controls to mitigate fraud risks are implemented, identified, and monitored for compliance on a regular basis. Very important. It has to be perpetual. It has to be an ongoing basis so that there are no chances of fraud creeping in. disaster recovery plan, business continuity plan, and crisis management policy defined and implemented. Very, very important. Disaster recovery plan, you saw COVID, how it kept in. Business continuity plan, because in UK there were issues where the auditors opined that it is not a going concern and things started on a very ugly front. And more importantly, crisis management policy, so that you can work in all circumstances whatsoever they may be. Formal process of succession planning defined and implemented. Very, very important. Succession planning has to be very candidly written. Formal process for management review mechanism exists and follows, because management review ultimately puts up a place when you start understanding what is desired of the internal audit and what are the outcomes of the internal audit and how they are effectively used. The next is addressing and managing existing and emerging risks. Very, very important. First of all, you need to understand the entire overall governance process. Corporate governance standards has to be there. Then you have to have the efficiency demands, the 6 sigmas, so that they are in place to ensure the risk is taken into account. Then you have to have information technology, which you call as IT governance, to be in place so that working is done in the same fashion. And then fraud risk. Fraud risk management, which I discussed earlier also, is of paramount importance. Along with this, you need to understand that there is social media risk, which has crept in the nowadays. That is again the reputational risk, which is very, very important. And cloud computing risk, because when things are in the cloud, there are very lot of problems. Going ahead, you are aware that today's program would include audit analytics in real estate industry. Second, key controls in real estate industry from IEA perspective. And lastly, audit landscape in retail industry and key risks. So once you go through them, I feel it, I have delivered a keynote address so that you're able to very well appreciate the fact of today's entire program. I can promise one thing, that today's program is going to be very interesting. You can ask questions as you want, because we have the best of the speakers. Mr. Manoj Agarwal with Metro Shoes has been a person who has created a lot of value and work in creating controls for the organization. Mr. Ratul Niyogi, a senior chartered accountant. Mr. Ratul Niyogi is a senior IEA professional working for Tata Trend and a person whom the industry looks upon for guidance. And Mr. Mandeep Singh, who was in Marico and now has gone to Atul Limited, is again a person who has traveled through various industries and has created a niche for himself. So, ladies and gentlemen, let's go ahead to listen to our revered speakers who have spared their time to ensure that you are placed at the right stand. Thank you. Thanks for giving me an opportunity. Over to Madam Surbhi, and Madam, the dice is all yours now. You can take it forward.
Thank you. Thank you so much, sir, for such valuable words and experiences of wisdom. We are pleased to have your presence between us today. Thank you. Now let's move ahead for today's first technical session, Audit Analytics in Retail Industry. And I would like to introduce our eminent speaker, CA Manoj Agrawal, sir, Head of Internal Audit, Metro Brands Limited. Manoj Agrawal ji is leading internal audit and risk management department of one of India's largest specialty footwear retailers. He has over 20 years of experience in delivering assurance and advisory services to management in retail, facility management, BFSI, manufacturing industries, etc. He had held commendable positions like Post Director for Enterprise Risk Management, also for ICI in 2010, and Committee of Members in Industry of WIRC. He currently is a member of Internal Audit Standard Board of Institute of Internal Auditors, IIA, USA, fellow chartered accountant, and having diploma in Information System Audit from Institute of Chartered Accountants of India, certified internal auditor, and certification in risk management assurance from Institute of Internal Auditors. I request Manoj Agrawal, sir, to share his worthy and valuable wisdom on audit analytics in retail industry. Over to you, sir.
Thank you, Surbhi ji, and thanks Nanda ji for giving me opportunity to share my knowledge, and also thanks Internal Audit Standard Board of ICI and Gwalior branch for giving me this opportunity. So good evening, friends. So I'm just sharing my screen. Okay, I hope my screen is visible.
Very much, Mr. Agarwal, very much. Please go ahead.
Okay. Okay, so good evening, friends. It gives me an immense pleasure to share some bits of my knowledge. So Surbhi Jain has already given about my profile, so I'm skipping the slide. Now, this is the most important slide for me. This is for my personal risk management. So this is a disclaimer. All the contents of the presentation constitute the opinion of the speaker, that is me and me alone, and they do not represent the views of the my employer, supervisor, nor do they represent the views of the organization, business institution the speaker is or has been part of. So whatever I'm saying, it's my own view. They do not represent the views of ICI or my employer. Some of the situation that I mentioned may not be true, and identities of any parties involved may have been disguised. Images used may be subject to copyright. So friends, with this, the personal risk management has been taken care. So let's start with two great quotes. So this first quote is, while we teach, we learn. So I'm here, not here to teach you, but I'm here to learn. I hope you will allow me an opportunity to learn by asking questions. The second quote, which I find very interesting, and especially considering the internal audit. Uh, so it is given by F. Scott Fitzgerald. The test of a first-rate intelligence is the ability to hold two opposing ideas in mind at the same time and still retain the ability to function. So, my dear friends, this quote is the epitome of internal auditor. This is custom made for internal auditors. Why? One should be able to see the things that are hopeless. So in industry or internal audit, you see things that are not working, and but yet you are determined to make them otherwise. So my dear friends, all my internal auditors friend, the moment you step into the field of internal audit, that itself shows that you have a first-rate intelligence. So congratulations, all my friends. So expectation settings, what do you want from this session? So uh, what I would request you everyone, just close your eyes, or you can take out a pen and pencil and just note down what is that one thing that you want from this session. Now, if I'm able to deliver that expectations during this session, great. If I'm not, please do ask me the questions, what your expectations, and I will try my best to answer that question, and I hope to meet your expectations. Retail. So what is retail? Retail is all about details. So this retail industry is synonymous with volume. You go to any shop, any any sort of say showroom which just doing transaction, you will find that there are a lot of transaction which is happening, and every transaction you need to be very meticulous, because at the end of the day, for every transaction you need to pass the test of customer expectations. So retail is all about details. Now, in retail, the labor is still cheaper than tools. Now, so of course we have marketplaces, e-commerce, but still you will prefer to go to the showroom to see, experience the goods firsthand, and who is helping you to experience the goods and services firsthand? The salesman over there, the delivery person over there, the waiter over there. And here the labor is still cheaper than the tools. Retail means personal service. Personal service means customization. Now you take any goods for an example. Now you can take a mobile phone. Today we are ordering a large number of phones, say mobile phone, over e-commerce. But if you want to experience how does that phone look like, what is the feature of that phone, you need some clarification. you still prefer to visit showroom, engage with the salesman who's eager and helpful to provide you appropriate guidance, appropriate clarification, so that you can enjoy the goods appropriately, or you can make the right selection. When you go to, let's say, an apparel store, the person you give your choices, the person there listens to your choices, listens to your requirement, also observes you and try to give you service. And all this service is personalized. Any good salesman will give you personalized service. If you are interested to look at more variety, he or she will ensure that they are showing you multiple items. If you are in a hurry, they will show you an item which is going to best fit for you. Retail is all about detail, and people are doing the same thing repetitively. So though there is the same thing repetitively, but at the same time, they need to ensure that they are doing it with utmost care. And great companies does this repetitive jobs efficiently and better. So, so you take two apparel stores, two footwear stores, two mobile stores, two grocery stores, and do purchase the same item from there, you will be able to differentiate between a great company and a mediocre company by experiencing how they are doing their job, that is to make you happy. So let me directly jump into the today's topic on audit analytics in retail industry. One of the foremost important item is the masters. Now, is your item master is in sync? Now you will say, hey, in today's world, generally your item master is in sync. But just visualize. Let's take a large retail chain. Let's take, for example, large industry. It can be, you can take Reliance as an example, or you can take Tata Trend as an example, or you can take, let's say, Visa Sales as an example. So all those companies have stores located at multiple locations. They would have, multiple structures, IT structures in place. In today's world, no one is using, the pre-printed price list, but everything is using the computerized. And they would be offering you thousands and thousands of goods, also called SKUs, on offer. They would also be, experimenting, because retail sometimes it is something a commodity business, and sometimes can be fashion business. So they would be introducing a new product. They would be selling the same product but different brands, and every product, every brand combination, every kg unit pieces is a different SKU. How do they ensure that their item masters in sync? They would have their item masters in accounting. They would have their item master in POS. If they are on online e-commerce portal, they would also be selling the same goods through their own website. And today the marketplaces are in vogue, so they might also be selling on, let's say, Amazon, Flipkart, JioMart, and whatnot. So everywhere they need to ensure that their item are in sync. So they may ensure that the accounting, whichever accounting system they are using, that is the main one. But how do they ensure that their POS item master is in sync? A POS refer to the point of sale system through which the stores are doing the billing. Now, there are companies who use the internet-based POS, and there are companies who use the desktop-based POS. Now, internet-based companies, then if you're using a internet web-based POS, then you need to ensure that the changes is happening at one location. And of course, someone need to also ensures that whoever's opened the system, if there is any local replication is happening, that is getting done. But if it is happening in a desktop-based POS, then not only the company need to ensure that their ERP system is updated appropriately, but also the POS application system is getting updated appropriately, and also the POS machine which is getting used at the showroom is getting appropriately. Now, one of the thing I found that where the company struggles is uh, they are in a position to create the various SKUs in the masters, but when it comes to taxes and MRP, where the company struggles, and let me tell you why. Now, last 3 years, the government has last 3 to 5, 4. I think this is 2017. So now it's 5 years. The government has introduced the GST, and along with the GST, though it has simplified uh, the rates across nations, but at the same time, there are also changes in the rates which has happened time again and again, and there is also profit sharing norms in place. So if you need to update the rates into your masters, so just visualize. So on 30th, you receive the date, and on first, you need to ensure that the whatever product you are selling carrying the right uh, GST rates in the system. Now also visualize the complexities, whether it is a web-based POS, is a desktop-based POS, number of stores the company is having. So it is quite possible there can be delay. So what I've seen in my experience, companies to ensure that the sales is happening in time, they update the POS application, and they may not be updating the accounting system in time, because see, as long as the cash register is ringing, then you can manage your business. A day's lost sale can be huge amount of money for a retail company. Now MRP, this is the most serious thing. So to changing an MRP in the system, you can say, okay, what is there? What is the problem? But you need to also see that for every change in MRP, you need to also ensure that the label on that SKU, on that particular unit, whether those are getting changed or not. Some companies may be sending the labels to the stores, and some company need to do that recall of those goods to their warehouses. Now, you can't be selling something at a higher MRP in the system while you are showing MRP at X price, and you can't be charging X plus one to the customer. Of course, you also won't like a situation where you are selling a X minus one situation, because this can lead to a problem. So this area is something where company struggles. When I say struggle, it's not that they are facing huge hiccups, but you will always find issues in this particular area. Now, in retail, it's a fast fashion. In commodity business, again, they try to give you maximum benefit. Now, there would be some item master which containing some rates. Now, how do you ensure that your POs are issued at the rate as given in the item master? This is such a simple thing, but where the dynamics is very high. Let's take grocery stores where somebody is dealing into something, and this, especially the Great Indian Festival, the various sales, where they want to do maximum amount of sales. So they would be ready to reduce the rates, and maybe they would be ordering something. So how do they ensure that the item master rate is the same this is the rate at which POs is getting issued? Of course, your item master rate, PO rate, GRN rate, invoice rate, the SKU rate, all those are need to be in the same. If you are slightly late in updating your master and your sales are happening, you will quite possible you may find cases where your sales are happening at a different MRP than what you have updated into the item master rate. Now this is basically your MRP rates. Why? Because to update an MRP in the accounting system is a very easy thing, but to ensure that this update has been replicated across your entire stores, across all entire POS system, in real time, on the same date, at the same time, you will always find that there'll be one or two stores they are lagging behind for whatever reasons. There can be, one or holiday in particular state. So it is quite possible your sale may be happening at some different price than your item master rate. Of course, generally this kind of issues get resolved in a day or two, but you will always find such kind of cases when you evaluate. Now, some of you may have a question. What is the advantage of web-based posts and desktop-based point of sale system? So if a desktop-based point of sale system is there, so they need to do it the beginning of the day work, the day begin process. Once they do it, now they are not dependent on internet connectivity, because whatever is updated, they can do the sales based on their desktop-based post. But if they are using a web-based POS, you will realize that if there is no internet connectivity, they are not in a position to generate a bill. If they are not in a position to generate a bill, now they need to take some hard decision whether to give you a manual bill or whether they need to say internet error. And it happens. And if you want to really test it out, you can go to any mall, go to the basement and try to make a call, and you will realize the connection is not that strong. So masters. Now, is your vendor master is complete is in sync with PAN versus GST versus place of supply? Now, a retailer who are pan India based, having pan India based operations, so they would have vendors again, which is having a pan India based uh, operations. Either you can be very strict that we will ensure everything is in sync, or you will say, okay, let's be optimistic. While the vendor is onboarded, let's do the transaction. Now, it is a simple thing, PAN versus GST. After 5 years, things would be in a control. But my dear friends, there would be some vendor who may not have GST number, so you can't make it mandatory. You would have vendors who are you are importing the goods. Again, you can't make it mandatory. So either you need to build controls which can slow down the system, or you need to build exception reports. Now there are certain vendors. Let's take an example. Let's take for example, say Airtel or Blue Dart or any such, say Vodafone. Now, though they may carry a single PAN, but they are operating regionally at a state level, maybe at a city level, and you need to ensure that that whatever transaction you are doing with those vendors, you are settling that account at that level only. Now, you may have a bill, you can have a consolidated pan India single billing, but that will slow down various things. Look up your employee PAN versus vendor PAN RGST. This is the simplest thing. Where you are doing, we are running a check. You can also call it a conflict of interest check, whereby you are saying none of your employees also acting as a vendor. Quite possible. There are a lot of transactions which would be happening. Now you can also look up your employee PAN versus GST on GST website. And once you do that, you will come across something very interesting. Let's consider your marketing department or your procurement department or any your customer facing department. Now, all those people, there is a potential that though they are working for you, and if you are successful, then they might be using this knowledge to run their own business. So this can help you to understand whether somebody is playing around with you. And look up your employee phone, email versus vendor phone, email versus members in loyalty program. Now, this last one, members in loyalty program. Now, some companies may say that it's perfectly okay that my employee can be part of my loyalty program. And some organizations says that no, we don't allow our members, our employees to become a member in the loyalty program. So depending upon the policies, you need to do this kind of test. All this test will help you to determine if somebody is trying to play around with your controls changes in cost and MRP. Now, any fashion related business, this is something very interesting and very important. Uh, you might have heard that in retail. So what there is a thumb of rule of three, or rule of thumb rule of thumb of a thumb rule of four. So whatever is the cost, so their target price is approximately 3 times or 4 times in that. And sometimes they need to reduce the price. Sometimes they need to reduce the MRP or increase the MRP. How do you ensure that all these changes, which is getting done in the system, is appropriately authorized? And my dear friends, this changes happens in bulk. Now, retail industry, just just think you're going to a store, be it is, let's say, apparel stores. You would like to see at least 10-15 designs. So if your favorite color is white, still in white color, you would like to see 10-15 designs. And they may be able to give you, say, 5 to 10 designs. And think of all the 7 colors, multiple of those colors, checks, lines, solid, print, and you can just visualize in number of SKUs the company would be having. Of course, some company says, okay, once a goods has come, full stop, and next time something new comes, we will create a different SKU. Then active and active users in your ERP, POS, and other system. A retail company, especially the storefront, there is a huge turnover. And because of this huge turnover, you need to ensure that all the users registered into your POS system, whether they are active, inactive. So there is appropriate in and out of the service control is there. And you will always find at any given point of time, there are certain issues. For example, one of the issues that any retail industry faces is the salesmen are even the helpers. They are generally minimum wage workers, and if they get slightly more, so they will simply stop coming to your shop and they will go to somewhere else. And sometimes they also come back to you. So depending upon your organization, you would have appropriate policies. You need to ensure that all the people in the system are active, or there is a reason if they are not active. Items with more than one supplier. So if you are procuring an item from more than one supplier, it is quite possible that your purchase cost may be different. You may have a policy that I will buy one item from one supplier, and I will not buy one item from two suppliers. So you need to also ensure that. And how can you ensure that? Only by rigorous validation of masters on an ongoing basis. Remember, retail is all about detail, and retail means volume and volume of data. The sales. Now, if you're making a sales, quite possible, the person who is generating those sales invoice, he may have mistyped something wrongly, done something error, and he or she would like to cancel those invoices. You will say, hey, that is a normal thing. It's perfectly normal. Now consider that this activity is happening in 100 stores, 500 stores, 1,000 stores. So how do you know that all the invoices which has been cancelled have genuine reasons? One of the way you can analyze those is do a ratio analysis. For example, you can take data for a day, for a week, or for a month, and do an analysis of number of invoices issued versus number of invoices cancelled. What I do, I do the same analysis, and then I sort it on large to small. So it gives me, let's say, top 5 stores with maximum invoices cancelled with the largest ratio. And then you can do an analysis. You can cross check with the store manager. Hey guys, what is happening? Are you facing any issues with the POS system? Or you have a new employee who don't know how to generate a bill, and then he need to cancel this? Remember, every invoice cancelled may result into customer dissatisfaction, which can lead to customer not coming back to you. Cash refund to customer. Wherever there is a cash, there is a potential of fraud. So many organizations says we are perfectly willing to accept the cash, but when it comes to making the refund, we prefer to make the refund via credit note. This ensures that the customer will come back again to my place and do some shopping. But we are talking about individual customers. Let's take an example of say 100 stores, and they would be having, let's say, 2,000 customer in a month. So that translates into 2 lakh customers in a month. And out of 2 lakh, there would be 5 customers who would be saying, no, I've given you cash and I want my cash back. And they would be ready to create ruckus in the store, and where either store manager need to keep quiet and lose the sales, or he need to call up his senior, take approval and do the cash refund. And it happens. Now, in 2017-18, demonetization happened, and suddenly everyone has to use the either credit card or digital mode of payment, from cash to other mode. And the various companies, organization, retail chains, they have implemented various methods to receive uh, sales proceed from the customer. It can be QR code, it can be UPI, it can be wallets, blah 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 blah. Now, not every customer is let's say they are having competency to use this system. There would be certain customer who would be saying, I don't have UPI, I don't use phone to make any payment, I don't use credit card, all I have is cash. Yes, it happens. And then they would want to make the payment in cash. Sometimes you would have all the payments and you won't have a single payment channel. Let's say there is some bug and customer says, I don't have cash and I want to make payment through UPI, or I want to make payment through credit card, I want to make payment through NEFT, I want to make payment through this thing. And sometimes the let's say especially in UPI, the staff is maybe using some other system which company is not using. So customer is making payment there and the staff is helping the customer to, the staff is making the payment. Now, when this happens, so you don't know who is a customer. Your staff is a customer or customer is a customer. Because when they are making the bill, because a customer is that kind of person, then your staff can generate the bill in his own name. Then we can also pocket other things. They may be receiving 2,000 rupees and they would be generating a bill of 1,000. So this can create an issue. Transactions at odd time. The most important thing is to defining odd time. There are certain shops which are diligent. So if they are closing at 9 o'clock, at 8 o'clock, they will say we are closing, and 9 o'clock, they won't entertain you. And there would be shops, they would say 9 o'clock we are closing, and 8 o'clock they will tell you, but they are still ready to engage with you, to help you, to entertain you, even at let's say 9:05, 9:10. So you need to define what is the odd time, because transaction which is happening at odd time, this can be an indicator that there is something fishy going on. Of course, this may be happening quite regularly during the end of season sales or Diwali or various festivals, because that is the time when the customer comes and make those transactions, make those purchases, and you can't turn away those customers at that particular point of time, because that is the time they are ready to spend, let's say 2x, 3x, 10x. Sometimes if you when you do your sales analysis, you also realize that items are being sold with 100% discount. That is, you are giving items free. You would be running end of season sales, let's say 50%. When you do analysis, you will realize that item has been sold more than 50%. Now, there can be some genuine reasons and there can be some fishy reasons. It is quite possible there might be a bug in your system which is being harnessed by the, say, either your salesman or showroom guys or some customer or somebody and defrauding you. And my dear friends, retail is volume. If somebody find out a single issue, then they are in a position to give you a big hit. So retail may I always says, nazar hati, durghatna ghati. That means the moment something goes out of focus, there is a chance it is going to give you trouble. Sales return after X number of months, beyond return period. Companies would have a policy that no return after 1 month, no return after 3 months. And at the same time, you will find cases where the returns are being done even after those many months. Now, you have a choice. Company can put a hard control that nothing beyond the policy period and be ready to disengage or dissatisfy customer, or they says ki, okay, this is our policy, but for deserving cases on case to case basis, we are ready to engage those customers. So if there is a hard control, then something need to be done at the back end. Back end means there would be delay, customer is becoming NFP, and there is a lot of work at the, say, back end office. Or you can't build your hard controls, you need to build only soft controls. Soft control means, again, 100 stores, some alert would be coming and they would be clicking tick, 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 done. Employee discounts. Now, employee discounts, retail has lot of employee turnover. So if they are giving some employee discount, how do you ensure that whatever is the eligibility, only that much of discount has been given? No, I know. So one of my ex-colleague is from a reputed his ex organization is a reputed company in retail. Now he's still or he was still able to take employee discounts even after he left the organization. And how you will be able to tell that? You will be only able to tell that if you are monitoring this particular activity, and it has two elements. One, who got employee discount and whether the person is an active employee or not. Salesman. Now, generally all the retail company has a norm that cash collected is should deposited either next day or they would be having cash pickup agency. For my dear friend, we are working in India with more than 25 states, with lots of festivals, lots of state level holidays, lots of things. Now, how do you monitor that it is getting deposited next day? It's simply not possible. Of course, you need to monitor whether it is getting deposited next day or some other day. And how you can do that? Why you need to do that? You need to do that because quite possible they went to deposit the money slightly late and they found that bank is not accepting. And you'll be wondering why the hell bank is not accepting the cash. For a very simple reason, every bank branch has their own limit in terms of how much cash they can have in the branch in a single day, which is determined by the insurance. So if they accept beyond that, then they would face an issue on the insurance. And banks are very rigid, so they won't accept that cash. So you need to monitor your cash. Whether cash credit card collection has come in full, bank wise, TID wise, not even today, There are instances where banks are not suitable to settle that fund in T+1 or T+2 day. Somebody would be using your international credit card, so there it goes. Whether discount given is authorized, whatever discount they are giving. If you don't give the discount, then customer will say, hey, I'm purchasing so much and you're not giving me a discount. So generally retail stores have some sort of provision, some way they manages the discount. Now, whether those are appropriately authorized, whether gift coupons, vouchers were appropriately knocked off. Generally, almost all the retail companies have appropriate control to ensure that gift coupons or vouchers have been appropriately knocked off. But you, as an internal auditor, still need to validate that all the gift coupons that has been shown as redeem are actually been redeemed and they have been appropriately issued in the past. This is very interesting. Cash collection greater than 49,000. Are you demanding PAN? Cash collection greater than equal to 200,000. Now, I would be really interested to know if any of your client is accepting cash in excess of 200,000. If yes, then are they in compliance with Section 269 ST of the Income Tax Act or not? And my dear friends, still today, the rural India, even urban India, there is customers who prefer to spend cash. Now, this is on stock. No, so this will this analysis you need to ensure that this will give you an idea whether your operations is working appropriately, smoothly or not. Whether all the dispatches from warehouse has happened in time. If it is not happening in time, then it will not reaching your stores in time. If it is not reaching your store in time, there is a position where they can be stock out and customer, you are not able to make those sales. And so in some cases, if you miss those period, then forget the sales. For example, let's take West Bengal, Durga Puja. So they would have specific requirement during Durga Puja. You can't send those goods too early, and you can't send those goods after the puja. So you need to be on time. Whether all the dispatches from warehouse has been received in stores in time. We are a big country, delay do happens. Whether the stores are performing a self-count based on defined frequency. How to build the control? You need to ensure that those are doing the self-assessment, self-count. Whether the stores are being subject to physical count as per defined frequency. So 100 stores, if you don't do a physical count, they will be saying, hey, everything is okay. And then you go after a year, your auditor goes and you realize that the 50% of the goods is not there. They've been stolen, freight, blah, blah, blah. Stock in transit. So this you need to monitor to ensure that whether goods are reaching in time. Stock limits review. Now, you are not going to put unlimited goods at your showroom. They have their own, say, physical constraint, and also the sales throughput. What is the average sales they are having? So you need to ensure that you have appropriate goods at the showroom. You are not wasting the showroom space. You are not keeping the goods which is not selling, because you need to keep a good amount of stocks at the showroom. And if you keep more goods, your more working capital get blocked. Then stock versus open to buy analysis. So this is basically you do a projection in the future. Based on that, you make plan, and you need to continuously evaluate this so that you are ensuring based on the projection, based on the sale, based on the stock, you have the right quantity which you can purchase or in the process. Buyer-wise inventory analysis of end of season sale, rock bottom, not so inventory. So basically, you're doing analysis that who is the best buyer or category manager, or who is able to procure the best goods vis-a-vis somebody is not able to do that. you can appropriately provide incentives to those people. Purchases, vendor quality analysis, standard delivery of goods, effective return ratio, PO issues closure, or open edit analysis. So, my dear friends, all this would have applications depending upon what is your organization policy. Now, if you're closing a PO, ideally it should not be reopened. But if your management allows it to reopen, then you need to see who is reopening, which vendor it is getting reopened, which category manager who's reopening for the specific vendors to identify, certain issues which may be lying in your procurement chain. Packing material. Now, so you go to store and you purchase something. Some of the store guys will, some of the stores will, some of the brand will give you packing bag. Some of the brand will tell you, okay, do you want a packing bag? Is this chargeable? And somebody will not say anything. So in this three scenario, what is your customer experience? Let's assume the brand is giving the packing bag for free and your store manager is enterprising. He wants to save cost for the company, and quite possible customer service is getting impacted. So you can do that, even that analysis. If somebody would be saying, hey, why negative balances? We can have a control that no negative balances. So my dear friend, retail is very dynamic. So you need to decide between customer service vis-a-vis the internal control. You need to decide whether you want to wait. So when a goods is to a shop, you want to ensure that they are doing everything before selling it to the customer, or you want to take my sale is more important, and after the sales my showroom manager can regularize everything. So it's a hard decision which you need to evaluate. GST, e-way bill generated versus invoices greater than 50,000. Now, one very simple way is you automate that. But to do this automation, it's always a challenging thing. So again, take an example, say 100 showroom across India. So, and you would be sending goods to them. You would be, let's say, asking them to send back to your warehouses. You might be also asking them to do a store to store transfer. Just think about that and just visualize. It is very easy to control this process from central location. But do you want your showroom manager to generate EV bill? I'm not so sure. Some of the store would have only 3%, 4%. And to do this integration with your existing ERP and POS, you are basically dependent on the mercy of your service provider. ITC claim in books versus ITC shown in GST portal. Now, the recent amendment, you need to still evaluate this. But with the recent amendment, some of the problem get reduced. ITC shown GST portal, not shown in books. Quite possible your vendors are raising a bill, but some of our department is delaying clearing those bills, and this delay sometimes happens for a month. So you will find certain bills which is present on the portal but not in the books. If you have to do quarterly closure, then you need to hunt for those bills. Otherwise, there is a risk you may lose the credit. Invoices on portal versus invoices in the books. If you generate, even the organization with more than 10 crores annual turnover, they need to generate invoices. Now, all these people now they're going to generate invoice on the portal, but they need to also compare whatever they are generating on the portal versus invoices in the books, because a fluctuation in internet connection may give you a false result. So there would be invoices on the portal, but those invoices may not be there in your books. let's say the 100 invoice in the books, and in portal you will find 105 invoices because of some fluctuations. GST claim versus GST shown in the books. Some of you would be wondering why we are doing this. Now, see, all those analytics you need to do, some in real time, daily, weekly, monthly, quarterly, to understand where is the Lucena in the process. Account receivable people, status aging, channel wise. Now, depending upon industry, you need to do this analysis, especially if you're selling to marketplaces. This become very important because online, though everything is digital, but still a large number of platform, everything is managed in Excel only. Debtors with credit balances, creditors aging, creditors with debit balances, vendors loan. So all these analysis you need to do. Rentals and deposit. Rental is very important. Why? Because it may comprise from 10 to 20% of your sales turnover. So it becomes very important. Now, a large number of good locations across nation, where the places where they would be coming under Rent Control Act as well. So you will also find that there can be certain issues. There are small people. The landlord is having, say, one property or two property, so 100 showroom, they can be 100 landlords. It is quite possible that somebody's grandfather was owning that, and because of tenancy regulations, now grandchildren has those occupation, and there are 10 grandchildren, so 10 landlords. So you need to do all this analysis. And in retail, if you don't renew your contract, your agreement expires, you may miss that uh, locations. If some of you will recall the Reliance and Future saga, so there was a dispute. Then Reliance has said that, okay, I will pay for your lease. They have paid for that lease, and then after 1 year, since Future was not able to do that, they have taken over that shop. Why they have done that? Because location is the most important. If Future has surrendered that, then Reliance need to fight with other brands to get that locations. So I'm not saying whether they have done right or wrong, but I'm giving an example that location is the important. In retail, what is the secret of great retail is location, location, location. You will find that. Loyalty program. So you can do analysis on, sorry, earning points, burning points, frequency analysis to identify fraudulent transaction. So this point I've already covered, the contact number versus loyalty. So you can do all this analysis, conversion into a loyalty program. If your organization has a policy that this says you need to convert loyalty walk-in into loyalty members, so some of them will be converting 100% walk-in to loyalty. And how? By booking certain sales into members of loyalty program, which will happens to be they themselves. So you need to all do all this kind of analysis. Insurance. So again, say 100 stores. So 100 stores inventory, your warehouse inventory, maybe one warehouse, maybe four warehouse, maybe 10 warehouse, and which is getting replenished, on in real time basis. And how do you ensure that the increase and decrease in the stock you're appropriately taken care? So you need to basically update the insurance company on a monthly basis. Now, how you're updating that? You need to have a mechanism. Otherwise, you will face issues. There is an increase in inventory during festival time. If you have not factored in, there is a fire, you won't get the entire insurance claim. Whether the consumptions of insurance is still valid. Cash in transit, cash in safe. So you need to basically fine tune. So with this, I'm almost at the end of, at my session. So what did I discuss that you want to know more about it, and what did I did not cover that would you like to know? So I'm ready for question answers. if any you have.
Hello,
Yes.
am I audible?
Yes.
Thank you so much, Manoj sir, for such knowledgeable session and just for taking up one or two queries. Uh, we are getting one common question from viewers, like in some of the retail businesses like handicrafts or very small business sector where physical inventory maintenance is not possible for clients. So how to report it, or being an auditor, how to tackle that problem?
So, but does their client knows what is the inventory level? See, uh, if they are, so let me put it this way. So I will slightly twist this question. Uh, I know it's a challenging one. So be it internal auditors or be it statutory auditor, we need to, before taking any engagement, we need to have knowledge about the industry. Now, eh, sometimes in that industry, there are certain practices getting followed. Now, we need to have awareness about those practices. And how we will have awareness about those practices, because this comes under the knowledge of the business. So we are accepting an engagement about an industry, then we need to also understand what are the practices which are prevalent in those particular industries. Because if we don't know, then we can be held negligible for not exercising the professional due care. Now, having said that, now so they can do, let's say, let's talk. So I'm say so let me be very clear. I'm not an expert in handicraft. My current employer is my first retail organization. So what we do in terms of inventory, so we know what should be the inventory, because we are maintaining everything into the system. But at the same time, if we talk about, do I know the exact number of pairs which is lying in my shops? Is this tying with the physical count? If I do right now, at that particular point of time, then answer would be no. But during the year, we have done a number of exercises. For example, so we are doing surprise physical count. We were doing it at a certain frequency. We are asking our showroom to do a self count. Then our statutory auditor, when they visit, they take up say 10 stores to do the physical count. Now we know with 99.98% accuracy that yes, we believe this is the right level of inventory. Now it is quite possible we will be saying we have 50 lakhs pairs in our showroom, and in reality we would have 49 lakhs 49,990 pairs, but the difference of 10 pairs would be negligible. And in future, whenever we are discovering that, we are making appropriate adjustment into the inventory, and of course we take appropriate actions on the, let's say, the store manager. So this various control will help my statutory is helping my statutory auditor to know that yes, this is an estimated acceptable level of inventory, and this is based on the internal control as exists into the organization through the various report and their own physical count at some sample stores.
Yeah, yeah. Thank you so much, sir. Thank you. Just one more question. A term you have used in PPT, right? Cashier's fidelity insurance. One of the viewer want to know about it.
So just visualize you are running a retail shop. Now, and let's further assume you have 10 shops and you don't have 10 relatives to manage those shops. So you need to have some employees there. Even if your relatives are managing that, so you would be receiving lot of cash in the showroom. So you will mandate, okay, guys, please deposit this cash next working day. So what will happen on Friday, okay, second Friday, second Saturdays, and second Sunday's sale? Those need to get deposited on the next working day, which is on Monday. And in India, the maximum sale happens on Sunday, Saturday, and Friday. So there would be a lot of cash, which can be a tempting for certain people, and they can run away with those cash. Now, if those people run away with those cash, somebody, how you will ensure that you are in a position to get back your, say, this loss. Insurance company exists. So in this, you take the insurance. The basically fidelity means the trust. So you're trusting your cashier, you're having appropriate controls. In spite of that, the cashier has run away with your cash. So you're going to the insurance company to lodge an insurance claim. For lodging that claim, you need to have an insurance. So this cashier fidelity insurance is for that. You may have, let's say, insurance for fire. So if you have insurance for fire, but your cash, somebody has taken a run away, you can't use that insurance for this kind of, say, event which is happening in your organization. So it's a type of insurance. So basically, you can insure a large number of risk with appropriate planning and appropriate risk assessment.
Okay. Thank you so much, sir. Thank you. We have number of questions in the question panel, but due to shortage of time, we are now moving forward. So thank you so much, Manoj sir, for such a knowledgeable session. And now I am moving forward for the second technical session, that is key controls in retail industry from internal audit perspective. And for this, we are having with us our eminent speaker, Ratul Nyogi sir, Head of Internal Audit and Business Excellence, Trent Limited. Very good evening, sir.
Hi, good evening. Am I audible?
Good evening, sir. Yeah.
Am I
Rathul sir has
audible?
extensive. Yeah. Yes, sir.
Okay. Go ahead. Go ahead. Sir.
Rathul sir has extensive experience in managing internal audit function in challenging high growth retail industry. Rathul sir is a Tata lifer with more than 30 years in group and with more than 17 years stint in Tata Consumer and had spent more than 13 years in Trent Limited. As head of business excellence for Trent, Rathul sir drives key business improvement initiatives and actively participates in the Tata Group TBEM external assessment process. Rathul sir has a CMA from ICMA, PGDBM Finance, CISA, and Design Thinking certification from MIT Sloan Schools of Management. He volunteers for various social initiatives and is very much passionate about sustainability. Without taking much of time, I request Rathul sir to share his views and perception on key controls in retail industry from internal audit perspective. Over to you, sir.
Thank you, Surbhi. I'll just share my screen and let me know if it is visible. Is my screen visible?
Yes, sir, it is visible.
So, very good evening, and thank you, Manoj, for setting the context. I think you went through in lot of details on the various areas that we look at in the retail space. Just before I start, a little bit of disclaimer from my side that what I'm going to share is my personal view and not necessarily to do anything with the organization that I work for. And also some of the numbers which are there in the slide is taken from data that is available in the public domain. So there is nothing which is confidential in terms of data that is being shared, which is not available to people at large. So with that context, I will move on to the areas that I thought would be relevant for me to cover in a session like this. What we are going to cover today is, a brief overview of spend some time on the retail industry and how it is evolving in the organization, uh, how it is evolving in our country per se. Uh, Manoj has also spoken about inventory, and I'll tell you a little bit of, bird's eye view of why inventory is so important in our retail industry and business. Manoj has spoken at length about cash and collections and cash equivalent. So, what is it that is so important for as cash and cash equivalent in our industry? Some of the key areas of you know important areas that we need to look at from a retail industry perspective. Uh, a little bit on online as a business, because online, as you know, is growing at a very fast pace in our country and as well as across the globe. And no retail company or no retail category is uh, not being impacted by the move of customers to the online space. And at the end, I'm happy to take questions that people might have, and happy to share my experience that I have gathered in retail over the last uh, 14, 15 odd years that I have been spending with rent. So a little about the retail space here. I'll just minimize this. So modern retail is relatively new to India as compared to the Western countries. Uh, Even today, a very large part of retail is in the unorganized sector. So you have these single shops, these corner shops, or mom and what in the Western world is called mom and pop stores. Organized retail is still uh, less than 20% of the overall retail market in India. And out of that, about market share of online is about 6 to 7% of the total market in India. So, while we say organized retail is less, but on the other side of the coin, there is a huge opportunity. This industry is growing at high single digit or low double digit. So there is a huge opportunity headroom for growth for all the retail players that are there in the country. So as professionals, as finance professionals, as audit professionals, we see a huge opportunity for people who want to understand this sector better, who wants to get engaged with this sector, and who wants to work in this sector. So to all my friends on this call, this is a industry which is going to grow. At least in the next 5 to 10 years, there's going to be a tremendous growth that we see for retail industry in India. And it is while it is challenging, it is also rewarding to be part of this industry and participate in this growth. So With that, I will move on to some of the areas that I sort of spoke about while I mentioned about the agenda. Uh, I'm happy to take, if there are any questions while I'm presenting, or maybe just after I finish presenting, I will clarify if you have some doubts or some thoughts. So moving on, inventory. Why inventory is so important in our business? I think the whole purpose of retail is to manage our merchandise in such a way so that we can reach the right merchandise to our customers, serve the customers as per their requirements and needs, and then rotate that inventory or rotate that stock so that we can offer customers the latest fashion, latest trends, or the required merchandise uh, at our stores as well as in the online space. So for any retail company, inventory turns becomes a very important metric, because if we are able to turn the inventory around more number of times during the year, we have seen the profitability of the organization can increase significantly, where company are able to turn where companies are able to turn inventory multiple times during the year. The second thing is a freshness of inventory. There are organizations which keep inventory for say a year, 2 year, 3 years, and when you visit the retail outlets, you will see that there is lack of newness, there is lack of freshness, or there is lack of uh, the right kind of inventory uh, that the customer wants. So aging of inventory is also something which we look at in a very, very important way uh, in order to understand just in order to understand uh, the health of the inventory in the organization. Good retailers uh, have a very strong provisioning norms or provisioning policy by which they continuously look at and move out aged inventory and always try to retain freshness. That is something we have over the period of time, we understand it to be very critical and very important for any retail business. The third lever here is about week cover. So by week cover, we mean how much inventory is available to meet the projected sale requirements. So sometimes we may land up in a situation where certain inventory falls short, or mm, where we are not able to meet the customer demand. Now, I will just relate back to the example which Manoj gave, that during the festive period, say we had a large festival in the eastern part of the country now, where Durga Puja is celebrated. If we don't have the right inventory or the right quantity or the right inventory, then the sale is lost. So the customer will not wait. Customer will move on to some other retail outlet or some other organization and meet his or her requirement. So it is very important to have the right week cover or the right level of inventory in the business. And the last bit is on shrinkage. Again, uh, mm, there was a question from the audience that some smaller organizations are not able to do physical verification of uh, inventory or stock. I fully understand and appreciate some of those challenges which is possible in a smaller organization. But for us, it is extremely important to align physical and book stock. So we continuously, carry out physical stock verifications and make corrections in our book stock. Not only is it important for control of shrinkage, it is also important because we take a lot of buying decisions, lot of merchandising and stock movement decisions based on book stock. So if the book stock is incorrect and I'm taking a decision based on book stock, uh, and the physical stock is something else, then my solutions or my actions will be suboptimal. So, I'm just giving you some of the broad level things that we consider as important in the retail industry. This list is not exhaustive. There could be, many such things or many other important things, especially those which are relevant to different type of industries, different type of formats in the retail industry. So, uh, what is relevant or what is a metric in fashion may be different in a food, may be different between, say, an apparel and a footwear. So those nuances one has to keep in mind. One has to look at it with the context of the business or the category that we are associated with or we are working with. So this is a high level picture of what we look at in terms of inventory. So as audit professionals, while we need to look at transactions, we also need to look at uh, a broader scheme of things to understand as an organization where do we stand. So I've just tried to give you a flavor of some of the analysis that companies do. And if you see this chart, which is inventory turns, now you see companies which are these are all from published information in the public domain. uh, you will see SS stands for Shopper Stop. So you have Trend, Shopper Stop, Lifestyle, H&M, Uniqlo, ABFRL, which is the Aditya Birla Fashion Retail Limited, and VMart. So this tells us that how many times in a year the inventory is getting turned, and you being finance, this is a set of finance professionals. I don't need to emphasize the importance of inventory turns to the bottom line of the organization and the profitability of the organization. So, these are some things as audit professionals, as finance professionals, are key levers of the business. And if we are able to work upon them, help our clients understand this better and help them in ways where they can improve some of these matrices, it will definitely add a huge value uh, to the business as well as to the organization. Moving on to the next one, which is cash and cash equivalent. These are some of the things that are important in a, I mean, it can be important in any other industry context also, but since this session is about retail, it is important in terms of a retail perspective. Operating cash flow, whether the business is generating cash within the period is very important for sustainability of the organization. Cash conversion cycle, how long it takes to convert, uh, goods purchased into cash. Uh, Again, how efficient is the business to manage inventory and in such a way that it is quickly able to convert into cash and roll back that uh, into the business. Current ratio, liquidity of the business is very important. So, a good balance between current assets and current liabilities are key to any business, and also key to our retail business. Collections control. Now, Manoj spoke about how important it is for business to ensure that cash and other receivables are collected, not only collected, but collected on time and duly accounted for in the books. So this is a big area. Why big? In retail? It is, we are in B2C space, so there are millions of transactions, millions of customers who are coming into our stores and transacting, and each of those transactions are unique in a way. So we need to take care of UPI payments, we need to take care of credit card, we need to take care of cash and any other mode of payment that companies allow the customers, and ensure that all those things are properly accounted for. We work with a very large set of people across the country, and there are nuances within different states. For example, banks are closed in certain days of the year for certain festivals across the country. Collections sometimes in some states don't happen on a daily basis. So those are things we need to take into account and build, controls, because this is extremely important for any retail business to have a very robust collection control. Otherwise things tend to go down, and you could face serious challenges if your uh, control of collections are not very robust and good. The last bit here is on cash reserve in days. This has particularly come to light after COVID. When it was, as an industry, when we faced the lockdown, our revenue became zero overnight, and but we had to pay our, pay our employees, pay our rentals, and meet our some of the statutory and our buying obligations. So it is very important to understand that how we, what is the level of reserve we need to maintain, so that the company is able to come out of, certain shocks or certain eventualities that may come up in future. So it can be, you can call it part of risk management, you can call it part of, resilience management of the company. But over a period of time, I think organizations are understanding the importance of this, and building certain mitigating controls, so that the impact on the business can be managed in a more systematic manner. So these are some of the areas of what we say is cash and cash equivalent, which are important from a retail organization perspective. Moving on, okay. So again, just to give you an example, again, I'm repeating for the sake of for the repetition, that these are all data which is available in the public domain. You can do your analysis, pick your set of, competition or industry that you want to look at, and see where the organization that you are associated with is vis-a-vis the competition, what is the trend, and there are lots of analysis that can be done in order to understand the strength or relative weakness of a particular organization, and then, as I said, work towards improving those. Moving on, some of the key, expense heads or areas that we feel are important in retail. One is the people and the related cost. So in retail, we employ a lot of people. There are a lot of people we require to manage the stores, the retail outlets. There are people we need to employ to manage supply chain. And there are people that we need to manage in the core part of in the core business of the design function, the buying function, the merchandising function, and also the support functions, be it IT, be it finance, etc. So retail employs a large number of people. So the large number of people also brings associated costs with it. So costs have to be managed within business parameters. Productivity uh, is very important, especially at the store where large number of people are employed. So this is something which is a very key area we look at as a business, and of course as audit and finance professionals, you can add tremendous value with different kind of analysis in these areas. The second area is importance is the occupancy, we call the occupancy cost. So that you can look at these elements separately or you can look at these elements together. Is the rental that we pay to where we have our stores. CAM is nothing but the common area maintenance charges, which is levied by the mall owners to all the retailers that operate in the mall, and the electricity. So these are the three key elements of charges which are associated with the stores. And as the number of store grows, these expenses also grow simultaneously. So these are big elements of cost for any retailer, and every retailer is trying to optimize these costs in order to be profitable and sustainable in their business. The third bit is, all the service departments. So we need to keep those costs within a certain parameter or certain range. And that is one area which is also, very keenly focused in terms of how we manage those costs within the reasonable limits. So that again, coming back to my point of being profitable and sustainable, it is very important that retailers manage their overall costs. And last but not the least is the advertising and sales promotion. Most retailers today engage in some sort of advertising and sales promotion in terms of be it digital advertising, be it advertising on television, print, and so on, and also sales promotions, so be it discounts, be it uh, any other form of sales promotions that they do to encourage customers to come and shop with us. So these are some of the very key areas of retail, and all these areas are very important in terms of components of cost. Uh, all these areas need to be continuously managed and tracked so that they are within the parameters that the business finds it acceptable. Uh, Another, simple example of service cost as percentage of sales. Here you will see Trend, Shoppers Stop, VMart, ABFRL, how organizations are faring, and each organization has their own context. So there are a lot of context behind these numbers that we need to understand. But once we understand those numbers and the context, it always gives you an opportunity to look at where we can improve, what we can do better, and how we can support the business and make it more stronger and more profitable in the future. Today, without online, I think every retailer, be it in the brick and mortar space or be it in the online space, is having some footprint in online. Customers in the post-COVID world have enhanced their adoption of the online purchasing. Uh, this has enabled retailers to reach a much wider base of audience or base of customers, which they may not be able to reach in a physical form. And it has also given customers an opportunity to access, products or services which may or may not be available in their uh, area of in their cities or uh, places where they reside. Now, some of the key things in online, the customer facing ones is, typically people have website or they have apps, applications, or they host their products in a third party site. So that whole managing that whole thing, be it your own internal website or application, or be it managing the relationship or the transaction between a third party, is extremely important. The second bit is on the price integrity. How do you ensure that there's a price that is listed on the website is correct? Because the products keep changing, upgrading. There are discounts, promotions which are continuously run on various systems, so that there is no leakage, there is no loss of revenue, and also there is price parity between what the organization wants to sell at vis-a-vis what the customers get in terms of their purchase price. On the back end side, there is a huge, supply chain efficiency which is required, and that is not maybe visible to an external world, but to manage such a huge number of SKUs which keep changing with each season, each new designs, new formats coming in, is a hugely important thing to have a very efficient supply chain. And without efficient supply chain, there is every possibility or risk of losing opportunity with the customer, not having the right product in the right time, uh, not being able to get the inventory turns, having aged stock, and so on and so forth. So there are lots of things which rely on supply chain, and it's extremely important not only for online business but also for our offline business or brick and mortar business. Online, again, customers can place orders from remote part of the country, be it northeast or Jammu and Kashmir or Kerala, Kanyakumari, anywhere. So how do you ensure accuracy? They get the right product as per their timelines, which is expected. So again, there is a forward supply chain which needs to work with the courier partners, with integrating systems, and that's one very important thing in terms of the whole online business that companies need to be good at. Returns, why returns management only in online? In the offline space, we see the returns to be a very marginal percentage. However, in the online business, be it globally or be it in India, we see percentage to be significantly higher. So you can see anything between 20 to 30% of your sale being, returned by the customer, and that could be various reasons for that return. So returns is a very, very important thing in the online business, and how you manage it. Different companies manage it in different ways, but this can make or break a company in terms of their profitability or success in the online business. And last but not the least, in this, cyber security becomes more important. Again, I'm not saying cyber security is not important in offline business, but here, since you are exposed to the internet, uh, the challenges and the risks are more complex and multifold, and therefore it is important that cyber security is of a certain standard and certain order, and it is maintained, it is continuously maintained and improved over a period of time. So with this, uh, you know as I summarize, retail industry, as again I'm referring back to Manoj, generates huge amount of data at transaction level. And as internal auditors, we need to build controls that would allow us to prevent and detect deviations quickly and act on the same. So today we have capability of, say, an RPA. There are applications of AI, ML, which is coming into the business. So there are various kinds of things in terms of technology, which is today available, which may not be, 5-10 years back, which was in a very nascent stage. And this is a great opportunity for internal auditors, finance professionals, to build controls which would not only help the business, but to quickly detect if there are any deviations, and work towards solving those challenges, and improving controls in the business, which would ultimately, add value, and become very useful for the business as a whole. So with that, I will pause. I will, I'm very happy if there to take any questions or any uh, thoughts that you have. I would like to make this as interactive as possible, and even with my fellow panelists, Manoj, uh, Mandeep, if happy to take any thoughts or any questions from you.
Thank you so much, Ratul Neogi sir, for sharing such worthy words, vast industry-specific perceptions and views, backed with amazing practical scenarios. Thank you so much, sir. So, I would like to welcome Mandeep Singh, sir. Good evening, sir.
Good evening, Surbhi ma'am.
Very good evening, sir.
Evening.
So let's move ahead for third technical session, audit landscape in retail industry and series. And I would like to introduce our eminent speaker, CA Mandeep Singh, sir, Chief Assurance and Risk Officer, Atul Limited. Mandeep, sir, is heading corporate assurance function at Atul Limited. He is a chartered accountant, ACS and commerce graduate. He is an outstanding speaker in various seminars and conferences. He has 14 years of vast experience in areas of internal audit and controls, SOX, IFC, audit analytics, fraud investigations, process involvements, automations, risk management, commercial and other areas of finance. Mandeep sir has worked for 13 years in FMCG sector, and prior to joining Atul Limited, he has worked in Marico Limited and Audit Audit India Limited. Now I request CA Mandeep Singh sir to share few of his vast experiences on audit landscape in retail industry in periods. Over
Thanks,
to you, sir.
thanks, Surbhi. Can you confirm whether my screen is visible? Sure. Give me 1 minute. I'll just. Am I audible?
Yes, sir.
Thanks. So I'll not take much time. So actually, Mr. Ratul has covered most of the points. So I will speak about the retail industry in India, about key risks in retail industry, then type of audits, and it better? No, because I'm alone at my office. But let me check my network. Is it better now? Let me again share the screen and change. Is it better now? I have switched the network. Hello, am I audible, and whether audio is better now?
Yes, sir. We can hear you.
Sure. Sorry for IT glitch. So what I'll do quickly. So I'll cover retail industry, scope in India, brief about retail industry. What are the key risks in this industry? Then type of audits, and where we can add value, how we can add value, how we can enhance the effectiveness, and then followed by Q&A. Uh, Moving on. So brief about retail industry. Actually, retail industry comprises of various segments, as Rapulji has mentioned. So it covers the groceries, it cover apparel, textile, consumer durables, footwear, jewelry, electronics. The size of retail industry in India is actually we are fifth largest global destination, and we have grown in last say 10 years at growth at the CAGR of double digit CAGR, And currently our size is 0.8 trillion USD, which is the size of retail industry 2020, and it is going to get double by year 2030. And if you see the retail sector, so these numbers comprises of both offline as well as the online. But if you see the online segment, the growth rate is actually 19% for online channels or e-commerce business. That rampant growth we have seen in e-commerce, and with this growth, there are opportunities. This is resulting or emanating new areas, whereas audit fraternity have larger role to play, and we have larger areas where we can contribute and create value. So moving to the risk. So before moving to the risk, so if we have to see this, do the SWOT analysis of this industry. So what are the factors which are contributing? Is the growing income levels in India as our GDP, we are fifth largest economy. Then the brand attraction. So earlier, so few years back, the thrust was more on the local, known branded products, and the income levels and spends level were very different. But now the traction towards brand, traction towards store culture, specifically in earlier it came in metros, then moved to tier one cities, then moved to tier two, and now it is moving to tier three, tier four. Then the innovations, as we know, the digital platform or e-commerce online platform, so which are one of the contributing factors. And fourth is the government policies, and as a result of which there are foreign tie-ups, FDI inflows, etc., which has helped to enhance the size of retail sector. Moving to the weaknesses of this or inherent risk, one is consumer behavior, consumer preference. So, from loyalty customer to now, it is pricing plus experience-based consumers which are coming into foray. Second is the brand loyalty. Earlier, as I mentioned earlier, there was a brand loyalty there for each product, but now it is moving from brand to more of a fashion and trying the new brands also, which is the one area which is actually leading to innovation by businesses or startups. And third is the price competitiveness. Because of number of startups in this space, there will be cutthroat competition when it comes to pricing, when it comes to schemes or offers. So this is one area of weakness or threat for the business. Opportunity wise, India, as we know, so our the population, so we are young or the youngest country in terms, and with the youngest population, so opportunity of business growths are quite promising. Second factor is the urbanization, uh, growth of e-commerce, supply chain, the better supply chains, and the FDI inflows, which are the opportunities. And threat-wise, as I mentioned, the changing trends at a frequent pace. Second is the locations of business, location of stores. Third is the high rental cost, specifically for retail sectors, which are offline models, not online. And fourth is macroeconomic factors like inflation, rising costs, and as well as the other macroeconomic factors which contributes to threat for this business. Moving to key operational risk. So in terms of key operational risk, so most of risk were covered by Mr. Ratul. Actually, as he focused on IT and cyber, so this is the primary risk because in retail stores, uh, whether it is offline or online, so we deal with a lot of data. So specifically, like stores in area or in area of beauty segment or skincare segment. people preserve the data about their customer, their phone numbers, their medical history, etc. As well as the financial data is also preserved by the organization. So then it becomes more important the data protection. Then there will be involvement for various third parties, specifically the developing various applications, various IT platforms, where and the integrations make data more vulnerable. Third is the cyber security, and if all of us recall, sometime back there was a data leakage from Jubilant, Domino's Pizza, where one can actually see from their phone number the orders which we have placed in last 1 year, then our addresses, etc., which makes data more vulnerable. Any such cyber security breach may result into reputation loss, as well as it may imply some compliance related consequences. Fourth is user access management, because if retail sector which is dealing with n number of stores, then it becomes more important to have a user access control specifically for the persons at an outlet level who are dealing into pricing, giving the special discounts or pending the offers. So whether which may lead to certain pilferages or maybe frauds or maybe unintentional things. And fifth one is the social media risk. So any such event happened at a particular store, particular segment. So nowadays the social media becomes so it works in both the ways. One in the positive side, second any negative news will create or hamper a brand or the image of organization. Second is the competition. As I mentioned, there is a acute and cutthroat competition in this space. So the key risks are the price competitiveness. Second is the brand image, or how we make our brand more superior as compared to competition. Third is again led by price or scheme competitiveness. Fourth is actually entry of new startups in domain of specifically retail, male, female grooming sector, as well as the food or apparel sector. There will be new entrants who can become disruptors. And fifth is e-commerce and digital brands, which is one area where businesses exposed to competition. In terms of supply chain, Ratulji also covered about supply chain, where to supply, when to supply, how much to supply, which is the inherited risks or the areas of concern for this business. So any planning miss may lead to stock outs or maybe overstocking of materials, which may lead to more expiries. Then certain product portfolios are more labor-intensive product portfolios, specifically consumer durables, and also any disruption in supply chain may lead to delay in delivery of products, or which may hamper customer experiences as well as movement of customer from one brand to another brand. So these are the risks. In terms of financials, so Rapul Bhai has covered in depth. So one is the cash management. Obviously, when there is we are dealing with the stores type of setup, there will be lot of cash transactions, and with cash there is inherited risk of embezzlement of cash or non-deposit of cash or playing the float. So which are the common risk area from audit point of view. Inventory management, as we have seen in last presentations, how much inventory, how much is the inventory turnover ratio, how quickly we convert inventory into sales and into cash. Third is the budgeting or the spends, which becomes more important. So effective spends leads to the profitability of this business. So tight budgeting and monitoring of spends or service is one of the key area. And fourth is the scheme management, specifically I'll give examples of say beauty salons like so Kaya chains. So they have certain schemes like say 20% of phone usage of particular card, maybe City or Kotak. But whether people are using same cards, so whether those are IT-enabled controlled by their store manager, etc., or whether payments are being taken in cash, but 20% discount has been pocketed by the store. So these kind of things are there. Similarly, extension of scheme, assuming certain schemes are available till say 30th September, but some customers which are loyalty customers, those schemes needs to be extended. Who can extend the scheme? How many times schemes were extended? These are also one of the risk area or area where revenue leakage may happen. And fifth is the credit risk where credits are appended, but that is not a significant risk for retail because mostly it is pick and pay model. And sixth main risk is the asset utilization, specifically for the chains or for the businesses which deal basis the outlets. So like footwear industry, so number of outlets, higher the number of outlet, higher will be the visibility and higher will be the customer footfall. But it may so happen that inventory utilization may not be that efficient, or there may be certain variations. There may be a disproportionate cost per unit of sale or selling expense, or there may not be certain outlets may be there but may not be the profitable outlets. So largely these are the nuances which are also one of the indicator of business growth, as well as for concern for auditors. And in terms of compliance, so changing government policies as well as the taxation and incentive to particular sectors, which becomes more important. And last on my slide is on the talent, because in terms of frontline staff, there is higher level of employee attrition. And if we are operating on a pan India base or in a particular region and offsite model, then integrity, managing people, bringing same people on the same culture, that becomes a challenge. And third is because of higher demand, poaching by competition. That is one of the inherited risk in this space. So any questions so far? Or shall I? So moving to the retail audits. So basically, retail industry, the expectation from auditors is to actually create value, to measure the effectiveness of business operations, and effectiveness not at a aggregate level, but effectiveness at a store level, and identify areas of concerns or areas where controls can be strengthened or value can be created. Those are the larger themes when retail audits are being undertaken. So, as an audit fraternity or finance fraternity, how we can add value while doing the work, how we can serve the business purpose. Number one is assessment of what are the risks for that particular organization. What are the measures which can be taken to mitigate or monitor the risk or to reduce the magnitude of or impact of those risks? Second is the analysis at a channel level, analysis at a trade level, geography level, which provides more insights to management in terms of framing the policies when it comes to sales, marketing. Next point is on operational and financial control, as I've captured about operational efficiencies, I've captured about operational risk areas and financial controls because of size and the spread of business. So these are one of the key expectations specifically from finance controllers and finance auditors. Fifth is how our competitors are performing, how market is reacting, what are the benchmark practices, and where we can do better as compared to competition. That is another expectation. And next are what are the opportunities? Opportunities may be from auditors, opportunity to control, but from finance controllers, opportunity to reduce cost of operation, opportunity to reduce total delivered cost for a particular product, and also to identify the gaps. Wherever in process there are gaps, or in controls or in GRC framework, if there are any gaps, so those gaps can be identified and can be plugged. Moving on to types of retail audits. So largely, actually, retail audits can be divided into six. One first is the loss prevention audit. So what it meant is, so what I meant by loss prevention audit is, so when the focus of audit is to reduce the wastages, reduce the chances of product theft or pilferages, uh, that covers under this type of area. So it helps organization to prevent or to avoid the cost destructions. Like say, for an example, the areas of inventory expiry or losses in the inventory at a store level. So those are or inventory audits or scheme audits. So these areas help business to address those issues. Second is on retail operations audit. So basically, these type of audits usually most of companies does to ensure that all the SOPs which are applicable for store operations, those are being followed. Objective is one, to see whether the laid down processes are followed, whether there are any financial gaps, whether internal checks and balances are in place or not. And the most important is the standardized processes are followed, so that experience of customer is almost same at all the locations of particular organization. Third is merchandising audit. So in terms of merchandising audit, checking the merchandise cost, whether spends are effective or not, whether what are the impact of merchandising activity on the business strategy, whether objectives are met or not met, whether there is course correction required in approach or not. Fourth is the retail promotion audit. So in terms of retail promotion audit, so it covers both. So it gives the insights about marketing spend and efficiency and efficacy of marketing spend. Moving to next is, as I mentioned, one of the key asks is how competition are performing, what is their approach, what are their strategies, how they are performing. So tracking the competition, doing competition survey are one of the areas. And next is the product condition or optimization, just to check what type of products were asked, what are whether product meet the specification, whether performance is satisfactory for the products, or what are the customer feedbacks. So these type of areas which are largely conducted by retail sector firms or companies. So and how we can add value, and few cases where we can add value, and this is my limited experience. I've seen certain cases, like say for an example, most of retail companies take help of local firms or CA firms to do inventory audit at store. So one way to do the audit is, like, so auditor goes, they physically count the material, take confirmation and take sign off and close the report. Second is how we can add value to business. We can actually see if there are expiry materials, whether those expired materials from where it has came, whether the discounts which were applied at time of sale, whether those were deducted or no, whether return value is actually basis the present prices, or whether we are processing the claim at time when billing was done. So because in one of my review I've noted that when returns were being accepted, return claims were processed at current cost. vis-a-vis billing was happened at 20-30% lower value. Similarly, like so in one of review, what we observed, so if we are accepting the return and just discarding the material, we have to actually reverse the GST credit. But if those return material can be sold as in scrap, irrespective of the sales consideration, GST credit reversal may not happen. And considering the GST amount of 5, 18 or 12%, which is a significant value for business, where business can optimize the. And fourth is establish and understand the trend. So if at what outlet, what type of goods are getting expired, what type of goods are in a damaged condition, what are the trends in terms of sale, whether it is within the acceptable norm or not. So these type of trends will help business to actually see whether there is anything of concern, whether there are some wrong practices are being adopted or being followed at a particular location, and also linking of quantity of return versus the quantity built. Say for an example, in one of my retail audit, what I've observed, so in particular bill, 10 quantity was billed, but while accepting the return, when reference of bill was given, there was no check. So actually, the person or the store manager have accepted the 15 goods back as a return. So those type of check and balances, whether those are there, not there. So these type of trending or analysis may help business to add or protect value. Then second is on the cost benchmarking, and in most of retail sector, so basis because of geographical spread, number of outlets, and most of places on rental. So what we can help business as a business controller or maybe auditor, so we can actually see or analyze the utilization of space. So in one of my review, I've noted how much self space is actually blocked for expiry or non-moving store, right? And how much space can be optimized, whether this much space is required or not required, whether rates at which rentals are low, whether those rentals are prevailing in market, or whether there are opportunities. Like say for an example, after COVID, most of retail companies have renegotiated the rentals with the landlord, uh, and also seeing the profitability at a store level and at a store and a product level. So at which location, which products are being sold. Like say for an example, if some particular chain is selling say idli dosa batters or such South Indian food in North market, which may not yield a better profitability vis-a-vis the shelf space and the cost of space which has been incurred. So, are there any post optimization strategies which can help business, and also whether there is a desired footfall at a particular or those stores, which may the help to the business. And one more area in terms of when Ratul bhai mentioned about service cost. So service cost, how those cost items are negotiated, how contracts are getting finalized. Say for an example, when so I did audit of male female grooming organization, and what I've observed, like so their major cost was cost of consumable and uniforms for their staff and uniform laundry space. So when we observe same type of dress is procured at difference of at 30% in north region vis-a-vis the south region. So then what we have noted that those rates are negotiated not at a central level, at a city level or at a store manager level. So whether there are such opportunities exist. Where similarly, same type of store in one area, that company was having say one security guard at one time and for two shifts. In other area, two security guard at a time and for three shifts. So whether there are opportunities to optimize cost without putting business into risk or adding the risk to the business. So those areas can also be reviewed. Third is, as I mentioned, like so scheme utilization. So I've actually covered. So what I've observed during my review, like so a trend of services, like say for an example, what was happening in that case, there was a offer by a particular bank, like say 20% off on a quoting bank. But what was happening, the transactions were punched as a card, but transactions were actually cash transactions, but discount coupon of Kotak card was applied. So similarly, secondly, what we have observed, transactions were happening frequently for from one or two or three cards, but which was not actually a logical trend. And when we analyzed and found later on, we found that those cards were pertaining to the employees' own card, and what they were doing, they were converting cash sale into the card sale, and they were availing those discounts. So these are the areas where stringent actions were taken, and these are the areas which auditor can keep in mind to protect business. And last on this slide is as I mentioned, so what were the criteria of visibility? What were the criteria of paying shelf space rental? Whether that those rentals were passed for right purpose, whether business objectives were met or not. And in terms of inventory, one is inventory turnover ratio, and most important is so near to expiry. How we are dealing with near to expiry material? How fast those goods are getting churned out? Those are also the areas where business can or auditor can review and can create value. And fourth is the inventory level versus the sales. In few cases, what happens, so sales does a planning at X level, but inventory levels are kept at a Y level. So there is a mismatch between the supply chain, which is leading to higher inventory, blockage of working capital, and leading to inefficiencies in business. And because of cutthroat competition and tight working capital cycles, so it becomes important to measure the inventory levels and inventory norms, both at a minimum level as well as at a maximum level. How, as an auditors, how we can add value? So first, we have to determine what are the main objectives of the audit. So if we are working as an SME or as an audit firm, so what are the objectives which business wants to drive? What are the business nuances? Basis which we must understand the business processes, IT infrastructure, and audit scope checklists to be developed, and then understanding of policies, procedure, fieldwork, analysis of trends, and leveraging analytics, which will help us to yield better results and outcome vis-a-vis vis-a-vis a few sample-based audit at a outlet level. Those are the areas which can enhance the effectiveness of audit. And for SMEs, my experiences, because of the outlet wise spread or the geographical spread, certain areas like of say outlet audits, leakage damage claim audit, or merchandising spends audit, spend management audit, etc., or scheme efficiency efficacy audit are outsourced to local firms. But what we have observed is basically how clients struggle is because audit assignment is given to one firm, and one firm has outsourced the network firm, but non-standardized practices of audit. So in certain cases, audit is done in with detail. In certain areas, that much detail is not available, or reports are not standardized. So how we can enhance experience of our client if we are working as an audit firm? So we can actually focus on our training of resources, creating the standardized template and checklist to enhance clients' experience. And we must have an mindset, not to just give assurance to the clients, but also to create value addition, to give insights which are beyond the scope of work, which will work as a cherry on cake. So with this, so these are pointers and a few thoughts from my side. So happy to take any questions. Survi ma'am, are there any questions from participants?
Yeah. Thank you so much, sir. Just one or two questions we have. Like one of the key operating risk area is like employee loyalty. In most of the ERP systems, we don't have any check and we can't control it. So, how to counter it? Like being an auditor, how to counter this problem?
So you are asking about employee integrity?
Yeah, employee loyalty, right?
Yeah. So employee integrity actually in this areas because this is actually challenge not only with retail with all the companies, right? So we are facing. So what can be done as a framework? So when we are reviewing holistically, what are the HR practices to scout for the employees? So background verification, so which becomes more critical, and also is the role rotation policy is a key. And third, we have to also see the trends. So at how much interval one is changing the job. So if one is changing job at 6 month interval, whether there is something wrong in terms of market reputation. And the fifth one is, as I mentioned, segregation of duties. Typically in outlet scenarios, so if managers are given excess power, powers can be misused. To certain limits, delegation of authorities, maintaining a balance between decision making and controls needs to be evaluated. These are the few pointers in my mind. I will request Manoj ji and Ratul bhai to add if they have any comments.
Yes, Mandeep, I think you have covered the important parts nicely. Yes, a background check is important. Also, some of the indicators, like when we look at shrinkage is one of the indicators. When we look at anything to do with cash shortage or the petty cash which is there in the business is one indicator. Also, we have some incentives where the store colleagues are given some incentives where the certain KPIs if they are within a certain parameter. So that also helps because nobody wants to lose incentive because somebody else is doing something wrong practice. So we have been able to manage or get early indicators of some of these areas very quickly and act upon them. Uh, but this challenge is a very pertinent challenge in retail, as all of you know that this is something we live with every day. We need to manage it better and have checks and balances which will help us to uh, find certain, at an early stage and take appropriate action.
So I will add that so we need to definitely have checks and balances, but at the same time, what is the action which is being taken in case some integrity issues has been discovered? I think that sets the tone right. So if you have a zero tolerance policy and you take a full action, then it also sending a message to other employees that the company is very serious about fraud prevention or on integrity issues. So we definitely need to do whatever Mandeep and Ratul is saying, but also make sure that the message is going to the right audience.
And one more point, which thanks for adding this. So one more point is actually having the right mechanisms to escalate these fraud instances or something which is happening. So one is the zero tolerance. Second is we should provide mechanism to people to raise their voice. Unless until it is there, so there is higher chance of doing something wrong by a person with the superior authority. So, which is one area most of companies or leading companies actually have implemented, and most of companies are in the process of.
Okay. Okay. Thank you, sir. One more question is there. Um, some good controls for real-time inventory reconciliation, like in case of online pharma business, when customer book online order and then it get cancelled due to shortage of inventory. So how to put some good controls and some proper check on that particular point of order booking.
Sure. So in case of inventory controls, yes. So if integrated ERP system is there, so these controls can be built specifically, and like so one company I've seen where actually not only the inventory or levels are monitored at a central level, but they have defined the optimum inventory at a store. So as soon as inventory level goes below that defined threshold, automatically replenishment orders get placed. So those are the things which can be deployed by the larger businesses, and larger businesses have those system in place. But smaller chains or smaller retail businesses, that may be one area of or opportunity. And second is like so I know for sure there are certain tools and certain businesses, smaller businesses, operate basis the tally, and tally is not integrated. But those add-on tools or RPA actually fetch the inventory data towards the end of day, and at day end inventory can be managed and monitored. So those things can be seen, or how the solution will fit to the business size and the investment which business may. So Manojji and Ratul bhai, can you share?
Okay. See, now you guys would have done some shopping on, let's say, Amazon and Flipkart. So you would have noticed last 10 remaining, last 6 remaining, last 1 remaining. How they are able to do that? So in a way, it's a very simple process. Of course, every simple process, when you go on implementing, it become complex. So what many retailers follow a system, they allocate an inventory. So if you have, let's say, 1,000 shirts, and you want to, so you want to do some shopping, so selling. So you say, okay, I want to allocate 100 inventory. So these 100 shirts are the dedicated inventory for the online model, through which the as and when a shirt is getting sold, the inventory is getting reduced in real time by 1. If the 10 is getting sold, it is reduced by 10. Now, if company says, okay, guys, I want to do more sales, so they will allocate that inventory more. Now, let me also give you another example. So maybe the person who has asked this question, it's a good opportunity to go understand what that organization is doing. Let's take a case of airlines. So they have, let's say there are 100 seats in a plane, and they know there is also cancellation which is going to happen. So their past experience says that okay, there will be 10 cancellations. So what those guys do, they book 110. So when they book 110, they always carry a risk. If only 9 got cancelled, then how they are going to accommodate that one passenger? So it's a cost versus benefit. But at the same time, if they book only 100 and 10 cancels, then 10 seats will go waste. So it depends upon how much optimization or inventory you want to do it. If you're going to be optimizing the last pair, last shirt, or last kg, you are going to face problem.
So just to add to what Manoj said, we have this concept of safety stock. So if your inventory is say 10, you only show the online, you show 8 in online or 7 in online and keep the rest as safety stock. That helps you to meet the customer expectation, requirements better. Fulfillment increases because many of us do ship from store and it is not always possible to get the right product in the right time from the store is one. Other thing is, even with the best of integrated systems and so on and so forth, there remains a certain lag or difference between the physical stock and book stock, however marginal it may be. And if the customer is looking for a particular product of a particular size of a particular color, then as retailers we want to meet that requirement. So one way to look at it is to build some safety stock in the system so that you have some buffer to meet the customer requirement.
Okay. So I would like to thank Mandeep Singh sir for making all of us aware with such key updations and practices aligned with current global business perspectives. Thank you so much, sir. And now I would like to request branch chairman, Gwalior branch of CIRC, CA Samad Donedia ji, to conclude this session and to deliver vote of thanks. Sir, am I audible to you? Samad sir?
Hello,
Yes, sir, we can hear
can you
you
listen
now.
me, Surbi? Hello.
Yes, sir. Yeah.
Yeah, there is some network problem over here, so that's why I'm facing here. Yeah.
No,
So
yeah.
so on the behalf of Gwalior branch of CIRC, myself Samarth Doneri, I would like to introduce myself. I am a branch chairman right now. So we are hosting, Gwalior branch is hosting this webinar on building an effective internal audit retail industry, which we have just gone through. So I would like to thank all of my dignitaries, panelists, keynote speaker, Shri Manoj Agarwal Sahab, Shri Mandeep Singh ji and Shri Ratul Nevini for spare us a very their precious time to deliver all the knowledge and all the updation regarding the internal audit perspective. So I am highly thankful to you, and I am also thankful to the Surbhi and moderator for giving her valuable time to us, as well as the team of internal audit standard board of ICI to organize such a. Uh, I think words are not enough to say, but it is a very good informative program for the internal audit. So thank you so much, everybody. Thank you.
Thank you, sir. Thank you so much.